The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we take a look at the market trade action on Friday, as we wrapped up another week of trade, we have that hot, dry weather forecast ahead of us as we head into this next week. And really, the soy complex benefiting at the end of the week as it appeared traders were putting a little bit of weather premium back into that market. Overall, the grains, though, across the board were moderately higher on the day, led by soybeans Friday. Livestock trade was higher as well. We have a lot to discuss. We wrap up the week of trade, and we welcome in Ted Seifried with Zaner Ag Hedge. Ted, good to catch up with you, buddy. How's things going?
It's great to see you too, Jesse. Yeah, things are good, man. I'm just, packing the last sort of stuff that I'm going to need to go on crop tour next week. I've got all the rain gear ready, and I don't know if I'll need it, but I've got all the hot, sticky, sweaty gear too. So, yeah, all getting ready for crop tour. But it's been kind of an interesting week that we've had here this week. But I feel like next week's going to be a very interesting week, and the week that follows it is also going to be a very interesting week. So, we're getting. It should be a fun time frame here for the next 2-3 weeks here.
Well, and as you mentioned, you're getting ready to go on crop tour next week, and I know that a lot of the grain and oilseed trade is going to be focused on that as we get into next week. And I don't know if you're going to need that rain gear because it's looking like it's going to stay pretty hot and dry throughout much of the Corn Belt for the next 10 days to 2 weeks. And you look at soybeans on Friday, tightest balance sheet there, and it seems like traders a little concerned that some of this late season heat could impact some of the final soybean development and getting us back up, around 1350 Nov beans and more. It felt like the kind of that short covering type rally in soybeans and the soy complex in general to wrap up the week, Ted.
I think there's maybe some new buying coming in as well. And I say that because beans were able to kind of break out of the sideways range that we've been in for about 2 weeks worth of trade. This is actually a new recent high that we've had since the end of July. And I do believe you're right. I think a lot of it has to do with the heat that's in the forecast. A lot of times when we go out on the Midwest crop tour and that third week of August, we're looking at some soybean plants that are still putting on some pods. When we're kicking around out there this year in potentially 100-degree temps, that's probably not going to be the case. So it's really a question of what is already there, right? And so that's what we're going to be talking about. And I think the trade is just sort of thinking, well, yeah, this late season hot and dry is just kind of a little reminiscent of last year, and how that clipped both the corn and bean crops there late. So I think, you're adding some weather premium back in. However, I don't know if that's going to be justified at the end. I'll say this, the eastern half of the Corn Belt has been really rather cool and wet for the month of August. In fact, this is one of the better months of August that I've seen in really my career. And like for us, for Northern Illinois, for example, man, we've been just kind of stuck in the mid 70s. We really could use some heat at this point, and we've been getting rain like every other day. So I don't think a stretch of some warmer, drier temperatures would be a bad thing for at least this side of the world. It's just a question of how long does that linger on. And so the 6 to 10 and 8 to 14 day forecasts have above normal temperatures and below normal precip, although those above normal temperatures really are only slightly above rather than sharply above like we're experiencing through this weekend and into early next week. And it's just normal to slightly below normal precip. So I do think you will see some rain in that time frame as well. So we'll see. And again, for corn, I do think some heat, some GDUs are and maybe not a bad thing. But we'll see. My expectation, every year before we go out on tour, I have expectations of what I think we're going to see. And for the most part, let's see, 9 years, I think there's been 2 or 3 years where my expectations have been way off. The rest of the years, it's been pretty close to what I was expecting to see. I'm not sure about this year. In fact, this is one of the bigger question marks that I've had since, last year was one with that late season hot and dry. And I was west last year. This year I'm going east. But 2019, I think, was the big one for me because of all that really wet start and the delayed planting. It was, how are these crops going to make it to the finish line? What do we have? That was a big curiosity to me. This is another one, though, mainly because, we had such a dry start to the year. And then the rain started to come there at the very end of June into July. But then in July, right during pollination for corn, you had that warm and dry stretch as well in areas like central Illinois and in a lot of areas. So I'm curious to see what happens when I get into central Indiana, central Illinois, eastern Iowa. I have an expectation that we're going to be seeing some pretty decent crops, maybe not as good as what we had last year, but really pretty good. But the concern I have is that we see some crops that look pretty good from the road, but when you get in, you start pulling ears, and you have either some really major pollination issues that you weren't expecting, a lack of ears, or just really severe tip back, or something just where the grain isn't there. I don't think that's going to be the case. But again, that's why we do these things, Jesse. We really don't know until we get out there. So that is a possibility. It's not my expectation, but it is certainly a possibility. And I'm very curious what we find next week. I think the Western Tour, Nebraska wasn't wonderful this year, but I think it was a lot better than last year. And I think that Nebraska crop's going to be a bit better than it was last year. I think that Southern South Dakota run is going to be a lot better, but still not perfect. So I think the West is going to come up with yields that are maybe a little bit better. I think the East is going to come up with yields that may be a little bit worse than what we were seeing last year. But the net result, my expectation is for a crop that is just a little bit better than last year. Yeah. Because of the timing of everything. And if that's not the case, we'll see. But yeah, that's sort of the expectation going in. I don't know. I also think for soybeans, maybe a big theme of this tour might be the potential that the soybeans have. From my experience, what I've seen around my neck of the woods, some really big bean plants out there. That doesn't necessarily mean big yields, because if you give beans an unfavorable August, those plants have to spend a lot of energy sustaining themselves, so they don't do a really good job of shooting pods or even filling pods later on. But if you give those big plants, those big factories, a really nice August, like we've had for the first 2/3 of this month so far, you wonder if that might be the recipe for just a monster bean crop. And how widespread is that? I don't know. So again, big question mark. But I have a hunch that might be a theme that you hear from both sides of the tour really, fairly often, is that, wow, these beans have a lot of potential, if we finish up well.
Well, and obviously at this point, we know that the demand picture for U.S. commodities has been fairly dismal. China has been stepping back in to buy some soybeans. We saw a corn sale to Mexico Friday morning, but overall, this demand picture is kind of ugly. So it would seem to me that unless we see supply problems, found here late season, that we're still going to have a bit of a cap on these markets overall, just with the ugly demand picture, Ted.
Yeah, and I hate to say it, for corn, I can bring that corn yield down to like a 169 and still be near or right at a 2 billion bushel carryover. Based on the demand schedule that we're seeing right now. So, but those two things, they do go hand in hand, Jesse. And what I mean by that is, if we go out on crop tour and let's say, by the end of the day on Friday, the pro farmer estimate is, because their number's different than what the raw data is. They take that raw data and they give it their spin. And either way, let's say they put out a 172.5 for corn, which is 2.6 bushel an acre lower than what the USDA was on this last report. We'll find out if that's bullish over the course of the next week. And what I mean by that, if the global end users see that number and they're worried about it and figure that they need to get ahead of it and start being more aggressive buyers, that will say that there is follow-up demand behind it, and they're nervous about a 172.5. On the other hand, if we don't see an influx of corn export sales, then oh no, that's really not good, right? So yes, I think depending on kind of what the tour finds, that might spur some demand if it's worse than expected. But if it doesn't, then yes, we are way behind where we need to be in order to try to hit the overall projection that the USDA has. The USDA has a big increase in corn exports from year to year, and at this point, I don't know. It's pretty tough to justify that. But we haven't even started the marketing year, so I can't say that it won't be there. Again, we've got a little over a year before we really come to the finish line of this next marketing year. But at the moment, it just doesn't feel like it's there. So, we'll see. Soybeans, we have been seeing some pretty decent sales. We were way behind, but we've really started to catch up here in the last few weeks. New crop sales have been rather robust. We've beat the analyst expectations on a weekly basis, I think, for the last 3 weeks. And that new crop's been kind of between 1.2 and 1.5 million metric tons every week. That's good. And really, this is the time to do it. I think every year I'm on crop tour, I feel like I see daily sales of soybeans pretty much every day. I think we'll see the same here this year. And I don't know if that means that global end users are just worried about this U.S. bean crop. I just think this is the time frame, the schedule for when they have to go and do this. And it just seems very, very normal for soybeans, right? I mean, it's not more robust than usual. It's not less. It's just kind of normal for soybeans. So, yeah, we'll see. Demand has been an issue, but mainly for corn. And again, I wonder if a bullish production number, if that's what comes to pass, but a bullish production estimate, that might spur some new demand and feed on itself. So, yeah, watch out for that.
We are having a conversation today with Ted Seifried from Zaner Ag Hedge here on Market Talk. Ted, the wheat market's looking like watching some of the Black Sea headlines again. Maybe, I don't know, was it a bit of a short covering into the weekend in the wheat trade? Just some folks worried about what could happen over the weekend in Russia, Ukraine?
Yeah. Last weekend was kind of the first weekend where we didn't have a whole lot of news to talk about from Russia or Ukraine. The item that we had last week was that Russia boarded a vessel headed to one of the port of Danube, and then left it alone, which could have been taken both ways. But on Monday morning, we kind of said, hey, that wasn't a terrible outcome. Who knows what happens this weekend, right? And yes, some short covering in front of that. It doesn't seem like tensions between Russia and Ukraine are getting any better. That seems for sure. But it does seem that maybe they've kind of backed off of attacking each other's ports, because now that Ukraine has proven to Russia that they can respond, right? They can do the same sort of things. Russia's kind of maybe backed off just a little bit. That could change. I mean, Russia has been unpredictable throughout this whole thing. I'm also going to say, though, for wheat, if you look at December Chicago wheat, we came down right to basically that previous low that we had back from the end of May, and had a little bit of a bounce from that. I think you've got some technicians looking at this, myself kind of included, suggesting that this could be the setup for a longer-term inverted headed shoulders formation. This is the second shoulder. If yesterday's low stays in place, Jesse, that's going to be almost textbook. And that could be setting up for a longer-term bounce in wheat. Now, I don't know if I'd see an aggressive rally in wheat. I don't think I have a fundamental reason and rationale for it today versus what we were looking at, a week ago. But it could be the beginning of a bottom. So technically speaking, a bounce from yesterday's low is not surprising. The question is, where do we go from here? If we take out that end of May low, get rid of that whole thought of a intermediate bottom and say, well, now this looks like another leg lower, which I can't say isn't going to happen. But at least the bounce that we see here Friday is giving it a chance to potentially have that longer term low in.
Ted, let's talk livestock. It looked like a bit of short covering in the hog market as well on Friday. And, it's interesting to watch that big spread between cash and the new lead month, October. We've been wondering, what could we see there? I know seasonally, this isn't a great time of year for hogs or for cattle as we head to the fourth quarter, Ted.
Yeah, absolutely. We've had our fun for the summer for the most part, right? I mean, the peak demand is like leading into the middle of July, really the July 4th weekend, and then after that, it really kind of simmers down in what we call the summer doldrums, right? Um, but interestingly enough, box beef prices have really stayed pretty strong. Pork cutouts have been pretty good. Like you said, we're trading a really pretty massive discount to cash when you look at the October hog contract, or even compared where the August went off, right? And you kind of think that we have the potential to get back up there. Yeah, I'm fairly optimistic after the last 2 days that we've seen in the hogs trade with that reversal off that sort of support level. We were due for a correction. We had the correction. Maybe that was it for the correction. I'm optimistic that hogs can go higher. Cattle, the one that really kind of scared me a little bit. It looks like the chart wants to roll over. We haven't had that deeper correction in cattle yet, and I think if we do have a correction, it's just that I don't think it's quite the end of the bull run, or if it is, I don't think. I think we'll go back and maybe test those highs again because we do have some rather bullish supply fundamentals for cattle, and that goes out well into first, second quarter of next year even. So I don't know. We could be on the verge of a deeper correction in cattle, but again, I would think that is just a correction. But like you said, seasonally, this would be the time frame to do something like that, and we'll see what Cattle on Feed report says. That placement number has been beating. That's been the sort of problem, is that the placement number coming in higher than expected the last few times around. Well, that kind of says that the supply problem might be going away a little bit quicker than what the concerns had been or what the worries had been. So again, that and seasonality those two things might be the catalyst. But like I said, we'll see we'll see what trade does on Monday. That'll really give us the true reaction to that Cattle on Feed report.
Exactly. I think we'll just have to wait and see kind of approach there. It'll be interesting for sure. I should ask you outside market stuff as well. I know we've had a lot of concern about China's economy with property values and more. And I know Evergrande filed for bankruptcy. That's been in the news. You watch the crude oil market as well. A lot of things swirling outside factors here impacting grains and livestock. What's your take on just everything going on economy-wise and more right now, Ted?
Yeah, everybody's been talking about a recession for over a year, it seems like, Jesse. And we really haven't had one, at least not domestically. You do see some signs of some international troubles. Like you said, China, right? And I do think China, if they were really to kind of spiral a little bit into a deeper recession, potentially depression, that would have a big impact on us. And I think that would bring us down as well. The problem is that if we're sitting here saying, recession, and it just doesn't happen, I don't know. You start to kind of lose faith in the guys that are expecting to see that. I don't know. We've really been defying gravity for quite some time. One of the biggest problems that we've been talking about is, commercial real estate. But I got to say, I think we're starting to see people come back into the cities. I can see it in downtown Chicago, even though I don't go down there quite as often as I used to. But it does seem a lot busier than it was even 3 months ago. So the question is going to be, how does that play going into the winter months, going fall and winter months? If we are going to have some pressure on our economy, I think that would happen late fall and into winter, and it could be a kind of a nasty time frame for commodities as a whole if that happens, and grains in particular, because that's sort of the time frame where we're vulnerable to that sort of thing. We don't have weather to talk about. Well, South American weather, but we don't have our own weather. We've had the harvest. We're pretty much, we know what our supply is. Now we're questioning demand. And if you throw something in the mix like that really makes us question demand, it could be a rough winter. So yeah, that is a concern. At the moment, I'm not doing jumping jacks about, hey, we're headed for a train wreck here. But yes, the Chinese data, the Evergrande thing, real estate issues for them and potentially for us, these are all concerns that we have to keep an eye on. Again, at the moment, I'm not hitting the panic button, but if you'd asked me this question 3 weeks ago, I'd say, yeah, there's really nothing out there that's making me worried. Those worries have intensified a little bit. And I also do think the Fed's going to have to raise rates one more time here in September too.
Well, Ted, we always appreciate the time and the insight to what's going on in the market trade. If folks want to reach out to you, get some advice there at Zaner Ag Hedge, what's the best way to reach you, Ted?
Yeah, absolutely. You can reach me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. And you can also sign up for our, we're doing an afternoon, just quick 2 to 4 minutes rundown of markets. It's basically just me talking for 4 minutes. But I think hopefully that's helpful for some. And then aside from that, you can find me on Twitter. I'm at the Ted Spread.
Always appreciate the time. Ted Seifried, Zaner Ag Hedge. Thanks for joining us here on Market Talk today. Have a great weekend, my friend. We'll talk to you soon.
Thanks, Jesse. Have a good one. Talk to you later, buddy.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.